Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name's Corey Kramer. Today we're going to be examining Charles River Laboratories International stock, ticker CRL. As always, this is not individual investing advice. This is just how I analyze stocks. After putting a video out every day for like the past week, I took a night off when things got really crazy yesterday. When things are moving that fast, I mean, you kind of can't even talk about anything without it changing by the time you get the video done. So I decided to take a day off and just kind of let things settle down. They didn't really settle down much today, but it wasn't a 10% move in the stock market. I'm recording this on Thursday, April 10th, 2025. Okay, so Charles River jumped out at me today just because I noticed that it was the stock that had fallen the most today. It fell 28%. And I saw that. I've been tracking it for a long time. I don't own it. And I wondered what the heck was going on here. So I went and investigated. And well, first, before we get into that, let's just look at the historical earnings like always so you can see why I might be interested in buying it. If you just look at their earnings, so they had a couple years. Let me shrink this a little bit. Let's get rid of the normal PE. Shrink this down so we can go year by year. Okay, so we have earnings during the Great Recession that fell like, call it 35%. That's pretty normal. I would call that like moderately cyclical, not completely unexpected. Now, I'll get into the stock price here in a second. But after that, they grew earnings very steadily, and then they got a boost during COVID here, kind of a COVID boost. Compared to long-term. I think my long-term average is like 12% a year for these guys. And this is like 9% well, that includes these years. But if we go to the peak, like 16, right? So I'm at like 12% assumption. What I think is interesting is just how short-term this market can be sometimes. So this stock was trading at the bubble peak, almost a 50 PE. Now, they had 2 years in a row with 20+% earnings growth. If they could do that for 10 years, maybe they deserve a 50 PE or 47 or whatever. But anybody who really stepped back and thought about this would realize that, guess what? The pandemic is not going to last even 10 years. So we should have known that things would kind of moderate and come down a little bit. And they haven't been crazy. I'm sure they've been buying back stock and stuff during this time to prop this up a little bit. But basically, before COVID, they were growing in mid-teens. And now once you average all this out together, they're probably growing like mid-teens or 10 or something like that. Let's see if I shorten it. Yeah, like 12, like right where I'm at. So that's still really good earnings growth. But now the stock is down 80% basically. So the stock is down 80%. Before today it was, let's see what it was down before today. Let's go maybe to there. It was down about 65-70%. Now some of that's what happens when a stock goes from growing 20% a couple years in a row for earning slightly negative for a couple years in a row. All that happened before today. So that's pretty normal. And these are the type of situations that I would normally start thinking about buying, which is why this one kind of interested me. And so, but here's the thing. So I saw that it fell this much and I thought, I know I track this. I update it every quarter. I update like just the earnings numbers and everything. And so I went because I figured, oh, this is probably flashing a buy for everybody over in the Cyclical Investors Club. I better go see what's going on. And I went and looked, and the funny part was it wasn't even a buy yet. So I'm going to show you the spreadsheet here in a second, but even though it's 80% off its highs, it hadn't reached my buy price, which is, I have to laugh at it a little bit because people do give me a hard time about my buy prices. And this decline that happened today didn't have anything to do with history or anything like that. We'll get to that in a second. But the reason my buy price was so low was because I went back in history, and even though earnings only fell 35% during the Great Recession, the stock price fell I don't know what this is actually going to be yet, but I think it's going to be a lot. Based on my buy price, the stock price fell 70%. So we have a situation where the earnings might not fall very much. And that was 2 years before earnings actually bottomed. Okay. So the market basically just cut and run before, the whole story was out, and, just didn't leave any prisoners behind, basically. Like, sell now, worry about whatever reason later. And so because I knew that, I was using my recession buy price, because we've been in kind of a recession-y, dangerous area since about 2002. And what that does is it assumes that the market might treat this stock the same here. So we aren't using traditional valuations, right? It fell to 7 PE there, which would be incredibly cheap on a 12. Well, here, if you bought it there, look at this. I'm not even going to go up to the bubble. I'm just going to go to pre-COVID right here. 25 PE, nothing crazy. 700% return, right? 20% CAGR over 10 years. That's fantastic. You couldn't ask for anything more than that. So if you can buy it that cheap, that's fantastic, and that's what you want to do. Right now, it's not quite there, which is why I wasn't flashing buy yet. So for me, it still needed to fall another 15% before it even would have flashed buy. But when a business falls 28% in a day, even though I kind of use this quantitative system to help guide me so I don't buy things too early, when you see something fall 28% a day, try to figure out, what happened. Well, what happened was, I didn't pull up an article, so I'm just going to go from memory here. Basically, the FDA announced that it was going to move away from animal testing for new drugs. So stop testing things on animals, right? And instead, they're going to use, I shouldn't laugh at it like ahead of time, because there's probably some kind of logic. They're going to use other countries' human tests and AI. That was what I read. I don't know anything about this industry or how it works, or whether that makes any sense at all. It seems a little weird to say, like, okay, we're not going to test on monkeys, but we'll go find some people over in some other country and test it on. I mean, that's what I thought when I read it. And then I thought Jay and Silent Bob and the monkey in their movie there, the orangutan or whatever. But anyway, on a more serious note, sorry if you own this stock. This wasn't your fault today. I don't think you did anything wrong when the stock fell 28%. And then I was like, well, how much animal testing do these guys do? Because I never looked into it really deeply yet, because it had never been anywhere near a buy price until today. And so I asked AI, how much of their revenue comes from animal testing. And I'm reading through, and it's like, the estimate for them was 79% is linked to some kind of animal testing. And I was like, well, holy crap, no wonder the stock price fell 28% in a day. And so it kind of made sense. So I would say there's a couple lessons here. One is, you can't go total quant, right? I don't think. Not using my system anyway. People do, obviously, but I don't think you always have to have some human judgment that kind of goes into it. And so this is one of those things, I think, where when I look at it and I say, okay, well, normally I'd be kind of licking my chops thinking about, okay, how am I going to buy a little on the way down? Am I just going to go all in if it hits my buy price? Am I going to wait for momentum? Those are the type of things I would be asking. But now that I know what's happening, now I just go in and I just delete my buy price like this, and, I'll leave some note eventually about, the testing and how you can't really use the history to predict the future now, because it's so different. It will be. I think it's being phased in, right? It's not like an overnight thing. So I'll probably keep this in here just in case. Policies change pretty fast around here. So maybe somebody will they'll approve some AI drug approval, and then a bunch of people will have adverse effects or something. And then all of a sudden, we'll be tested on the monkeys again. But So I'll probably keep it here, but I'm not going to jump in and try to buy this one. Now, the only real lesson for investors who bought this, I think, down here, like anywhere down here, like from, if you bought under $200, that's I think that was an okay price to buy. That was probably like a fair price to buy, especially when the rest of the market was pretty expensive. Now, it wasn't okay for me because I'm trying to get things like super cheap. But let's just see what this dip was. That's like a 16 PE. That was almost the same as 2020, right? So I don't think investors really did anything horribly wrong if they're buying down here. Now, if they're buying up here, that's just a different story. They paid too much, right? So all of a sudden, the FDA just snaps his fingers and says, basically, these guys, I don't want to say they're out of business, but I mean, we're going to severely adversely affect your business. With like a little memo or whatever the heck they put out. So that's not investors' fault, I don't think. And the only way you can protect yourself, in my view, against this sort of thing in your portfolio is to not to be concentrated, to have an unconcentrated portfolio for your initial positions. And then if you want to let them grow, I'm not a rebalancer, but on initial positions, I like them to be between like 0.5% and 2% of a portfolio. I don't like the initial position to be above a 2%. Now, if it grows bigger, that's great. I want the winners to grow and let them grow and compound. But this type of story can happen to almost any business. It really can. I mean, now, not the exact same thing, but this kind of is a black swan. I mean, I don't think anybody was expecting this, and that's why the stock dropped 30% in a day. And I don't even know if the reasoning behind it is legitimate. It could we'll just leave it at that. But I think the only way to protect yourself against these kind of drops so I would say if you bought at 200, it's down at 100, you lost 50%, something like that, is to just have small positions initially, and you can take a 0.5% loss on your portfolio, right? And go on. I mean, I've done it. I've gotten wiped out. I mean, we owned Signature Bank, and it disappeared over the weekend, one weekend, never opened again. I mean, I think we collected a little bit of a dividend, but it was like a 98% loss, but it was a 1% weighting in the portfolio, initial weighting. And it had doubled at one point, so it was bigger at one point. But you just have to accept that those are gonna happen every now and then. And you don't want to have a third of your money in Signature Bank or Charles River or any other thing. If you're Warren Buffett or you're Charlie Munger and you really know what you're doing and you want to get rich quickly or somewhat quickly, that's how you can do it. Not very many people can do that. And even with Charlie, when you look at I don't know exactly how big his bet was on Alibaba before he died, but he said that was one of his biggest regrets. Now, he had lived almost 100 years and probably invested like 80 of those years or 70 of those years and using this concentrated method. And he's very smart, and he made it that long without making a really gigantic mistake until the very end. But he lost a lot of his wealth on that one investment. I mean, I know it because he said so. And if Charlie, can make that and lose a lot of his wealth on a single investment, everybody else will probably do it, and you could get wiped out. I mean, it's not the type of thing. Now, if you own a business, sometimes you have to do that, but you're in charge. I'm not in charge of Charles River or definitely not Alibaba. So, all right. So that's kind of just a little thoughts case study, how I would approach some of these. This is a stock I could have potentially owned under different circumstances when this type of news came out. And it's unfortunate for investors that think that these type of decisions are being made, so quickly, that a business isn't given time. It doesn't appear, at least according to the stock price, time to adapt, change, right? That's unfortunate. And we're probably going to see more of that happen. So especially in this market, I mean, really spread the bets around, because this single stock concentration is like a real risk for folks here. Okay, thanks for watching. If you found this useful, hit the like and subscribe button. I have a free tier over on Patreon. I have a weekly picks over there for $25 a month. So check out those links and subscribe. I'll have some more videos coming out soon. See everybody later.